Morning everyone. So it's 5 to 8 in the morning and I've just been at my desk actually since about 6 just doing other stuff. Couldn't sleep, so I thought I would come up and have a look at the markets. I'm going to do a market scan, so here we are. Let's go through. I'm going to run through the indices just from top to bottom on my watch list and just go through those from top to bottom. So I'm inclined, so what I'm looking at on these is the daily, right? We're range bound, like we're definitely not uptrending. If anything, we're downtrending or range bound. So I'm very cautious, and you can see now it's bumping its head up against 26.7, so we could end up with a down day today. So I'm cautious because today, if today is a bearish engulfing candle, that implies obviously a bigger move, or potentially a bigger move to the downside. And so we're in this very awkward phase where the trend is not strong, it's not really bullish. Yes, it could recover, there could still be buyers, it could still go up, but it could also head lower. So overall, it's one of those ones where basically what I'll do is wait until about 1 o'clock UK time to see if it has started to creep above those levels. If it has, that implies, that hints that the Americans coming on board, getting up early in the US, coming onto that session, will be bullish. So, and then I'll start looking for long positions. We've broken the high on the S&P 500 on the daily, so that implies a swing low, but it could be, as I said, an outside candle. So doing that. The Nasdaq, which broke a low and has a lower high, lower low, technically is in a downtrend. Let's just call it range bound. Nice bullish candle yesterday, so it's produced a swing low. It looks relatively bullish. I think if I was going to trade this, I like that 1 hour time frame potentially to go long. But again, it's just a bit of a mess. So in short, the indices are not really ideal. Let's go straight to the Tokyo session to see how the Tokyo session has coped with everything. And so the Tokyo session has been bearish. That's not a good sign. Let's see what Nikkei looks like. Nikkei's also a bit bearish. Let's look at Hong Kong, Hang Seng, also a bit bearish. So the implication, generally, if by this time, if they were bullish, that would be a good indication that we're probably going to be bullish across the board. Although they do sometimes follow the US, they often follow the US when there's a clear movement in the US, like something quite big. If there's a big drop in the US, then the Asia session will have a big drop the next day. But otherwise, if there's nothing else really going on, they could also give an indication of what's likely to come. So if you're expecting a big drop and they actually climb, then if you're expecting a big drop, if I'm expecting, for example, today I'm expecting the US markets to head lower, but the Asian sessions or the Tokyo sessions climb, it's probably an indication the US sessions, because they're thinking the same thing. So if they're bullish, then there's an indication probably the US session won't drop. So it's a good little thing I learned in about the last year. Dollar basket. So let's look at the US dollar. It is definitely overextended on the daily. It's producing a bullish candle, which could be an indication of a retracement back up to previous levels of support and resistance. I'll keep an eye on that 4 hourly. So what am I expecting? Well, either the market will resume over today, excuse me, bearish candle continue down on the 4 hourly, or it'll continue upwards higher and higher until it heads up to 94.50 and we'll get that retracement, and then later in the week we potentially get a carry-on move to the downside. So euro dollar would be the same then. I'd be looking for bullish candles in the next, from this candle, which closes in 22 seconds. Okay. I'm just going to wait for that. So when that closes, and then either that or the next 2 candles to be bullish, to turn around. But alternatively, if they just keep going back, then my instinct is that the daily has begun a retracement. So it's caution, but it's beautiful. I mean, in principle, I am long on this, but it is possible that daily is overextended. The 4 hourly looks fantastic. So the 4 hourly might actually continue, but the daily looks problematic. Okay, so that's closed. We've got the next candle open for the next 4 hours for me. And it'll be the same for cable. It'll be the same for Aussie dollar and Kiwi dollar. And they actually, look, you can see they've taken quite a knockback. So what does that mean? It means so far I've not seen anything that I consider safe or really ideal. Dollar yen is not ridiculously overextended. Yes, it's far away from the moving averages. Is it at a key level? We'll have to, it doesn't look like it. So that might go a little bit further. Dollar Swissy. You know, dollar Swissy really does want to actually carry on. You can see the price action's gone sideways here. Consolidated. I think it's very keen to carry on. But it is also overextended on the daily. And if the dollar ends up retracing, it's going to come back up anyway. Oh, excuse me. Sorry, as I said, I haven't slept very well lately. I apologize for the yawning. So again, really not loving this. Dollar CAD, that looks potentially divergent. So why I say that is because a bit of a reaction there, pushback, and then bullish candles pushing back here. So not much of a fresh low there. So usually if I reduce price, there'll be bullish divergence, which it appears there is. Both indicators climbing. So you can visually see divergence after a while. You learn to spot it with your eyes. What you do is you start to see the swing lows and swing highs, and you start to see how they're kind of not going as far as they used to. So anyway, that's divergence, so that's a pass. Euro GBP. Look at the daily as just in this whole area, just encountering resistance, and then you look at this across the board, it's just a mess. So that's a pass for today. Euro Aussie. Excuse me. This looks potentially, there might be some potential here. 4 hours setting up a bullish candle to break through to carry on up. It's going to take another run at 1650. I think just based off that reaction at 1650, that could be there. So I think that's going to continue on upward. So Euro Aussie so far being the first chart that I've seen that might have potential. Euro Kiwi, a little bit overextended on the daily, but I think this can go further, and I really like the look of that 1 hour chart. That's great. So what I'm inclined to do in this particular case, we are now at the top of this range. I'll watch the 1 hour for retracements. I'll tell you what would be amazing would be a return to this previous batch of highs. An entry, I'll highlight it on the chart. If I could get price to come back to that area there, which also would overlap potentially with fib levels. That's a buy. So Euro Kiwi being the first one, Euro Aussie showing potential, Euro Kiwi being the first one I would actually do on that. The Euro Yen has produced bullish candle and another bullish candle. I think it's going to try and carry on up. So I can keep an eye on it. What I would need to see over the next few hours is see this 15-minute chart actually start to trend very nicely. And that would be it starting to break through that 1.24 level. Euro Swissy. I'm going to leave that for now. That just doesn't look right. Something's off about that. Let me explain what I mean by that. It is in an uptrend, but it's the big move, consolidation, big move, and then this pause. It's weird. So something about that is throwing me off. And then when I look, everything looks a bit overextended, a bit of a downtrend here. That's a downtrend. That's a downtrend. It's basically it's potentially coming down to this level to test it for support, and then it's going to carry on up. So I'm just going to wait. EuroCAD. Okay, so Steve, you asked me to have a look at EuroCAD, and that's why I looked at it. It was quite funny because I was going, okay, downtrending here, downtrending here, downtrending here. That's the only one that's come back into this area. It's also a nice round number area. It's a little bit overextended on the daily, exactly as you said. Everything you said matches up. It'd be nice to come back down to this level. So that could happen. But again, you're waiting for a bullish candle here anyway, so there's no risk. You're not in the market. You're waiting for the market to tell you that it's bullish. And on my side here, I've got 4 hours left, so there's no rush on that as a trade. Remember, guys, we only need 2 to 5 trades per week as a minimum. So there's no panic, there's no rush. It's Tuesday. We might get 2 or 3 trades today, and we're done for the week, so to speak. I mean, obviously, the goal as a trader is to trade as long as the market is producing trade setups. So if 1 week it produces 20 great setups, take 20 trades. If the next week it produces 1, you take 1. Okay, so, and you're going to probably be going, well, how do I know I should take, how will I know that I should take a trade or not take a trade? I mean, that's part of why I do the webinars that I do as well. So where we cover what kind of conditions we should trade and which ones we shouldn't. So I jokingly, and I did this a while ago, you can actually see I did it on the 22nd and 23rd. I've been talking about this changing direction. In fact, I was talking about it here. We went a little bit further. My dog wants to come and lie on my feet where it's nice and warm. I think we're going to see a change in trend, and I've highlighted my sort of proposed route. So that's how I expect the price to flow. So I'm just going to keep an eye on that, but that, guys, it looks like it's going to come through. You can see here it's got a level. Once it breaks through that level, it starts to, that's kind of what I'm expecting. Basically, what I'm looking for is once it breaks through that level, I'm looking for pullbacks to that level for buy positions on multiple time frames. So Pound Aussie still on my watch list, guys. Still looks like it's going to come through on that. Pound Kiwi showing beautiful, like this is just a primo example of bullish divergence. Just coming down, applying the brakes, kind of comes down at a steep angle, slows down, then comes back up, and then produces a strong, both candles strongly rejecting that level. So it's a double rejection, a double bottom, but that price action there being a clue that the market is going to go up. This is easily recognizable as a bullish divergence. And you can see that strong bullish divergence there and there. So you can see it visually on the chart. And so that's going to change trend, which means I would consider going long on pound Kiwi today if the spreads are reasonable, because the spreads can sometimes be horrible. This is a random bit of trivia, but there was this one day I was at a meeting with Saxo Bank, and they were showing me their liquidity on pound Kiwi because I was looking to trade it with them. And it turned out I was at one point in the previous week I was the single biggest trader of pound Kiwi, which for a large account, which was a lot and lots of money, and I had a lot of exposure in that market at the time. But I didn't realize, and I remember as I closed my trades, I saw the market change. I literally saw it update as I closed out. I had about 8 trades open, and as I saw them close out, I saw the market twitch, and I was like, "What?" Anyway, and it was early hours. Pound Kiwi is not anyway. So at that one particular moment, I was probably the single biggest kind of trader of the market. But that's not to say that might have been a once-off event, but there was definitely a correlation. Then when they showed me their liquidity, there wasn't much happening. It's not something a lot of people trade too much. So pound Swissy. Oh, and also they saw the volumes I was doing, so they were able to correlate that. Pound Swissy daily is just a range bound, so that's immediately just a stay away thing. It's just not much happening there. And you can see it here. It's got no clear trend, and it's got no clear trend there. It's basically saying, listen, if you want to play me, you're gambling, and so you deserve to have your money taken off you. GBP CAD. I think it's setting up to go long. It's just not the best chart I've ever seen, but it is bullish, and that looks nice and bullish. That almost looks like a bit like a flat level breakout in isolation. That looks like that wants to go up. So potentially a swing low trade on that one, okay? For you guys familiar with the PLT or the trend flow, that's what I'm talking about. Aussie Kiwi. This is bullish, so if you want, Aussie Kiwi is definitely on the table. It just depends on your liquidity and so on and so forth. Aussie Kiwi looking long. Not much happening here. Aussie Yen at the moment. Aussie Swissy, no. Aussie CAD. It's creeping upwards, but it's just a mess in every other respect, so I would say pass. Kiwi Yen looks bearish. Okay, there's a level of support where we are, right? That you can see that level of resistance and support. So I expect that as we approach that level, there'll be some strong bounces. But if it breaks through that level, there's a nice move down and there's room down towards that. And so Kiwi Yen shorts below that level looks good. Kiwi Swissy looks good for, I mean, I like the look of it, but it's also got its weird areas here, but that potentially also short. Swissy Yen looks like it might have a swing trade setup on the daily. Look at that level of resistance offering a bullish candle. So that could be a swing trade setup on the daily. Cool. So I must just check that again at the end of the day. This is a mess. There's no real trend here. Price is just going up and then back, up and then back. It's a waste of time and a waste of money. This one, interesting. Look at that level of support there. Prices pull back. Potential bearish candle could be a swing trade short. Both of those Swissy. So it's a Swissy chart that's doing that. Gold. This is not a surprise. If you're watching any of my videos, you'll know that gold is sitting close to 2,000, but is really and very much so in this area that I've highlighted. It's overextended. So if today, look, it could produce a bullish candle here and make another run. It's honestly, it literally hit 1950 and is therefore halfway between 2,000 and 1,900. And it might decide to just attempt to go up to 2,000. I am not trading gold. Now, I've taken my profit. I'm out the trade. It's overexposed. It's higher risk. I'm not saying it's not going to make it. I'm saying it's clearly higher risk. It's overextended on the monthly. It's overextended on the daily. It's overextended on the weekly. And it's overextended on all other time frames. It looks good, but it's just high risk. And that, if that closes as a rejection candle, my expectation is to see gold come back down. Silver, same thing. High grade copper. The beauty of this one is that it's been consolidating. So if you look at it on a weekly basis, you're going to find that it is at a level there. You can see that. It's waiting for the moving averages to come up. It's not able to go anywhere. There's just not enough buyers above here. Not really enough sellers below here at this point in time. So that's a wait and see. It's not there yet. Crude. So crude is going to try and climb. Based off this price action, it's going to try and climb. This could be a potential swing low trade. Yesterday's candle. So what that means is if I'm not going to trade the daily, I could trade the lower time frames. But I would be here, 15 minutes, 30 minutes, 1 hour, looking for that to head up. So crude, it'll be the same for the others. West Texas, Brent, all of them will be looking bullish to go up. It's not a strong trend, but I think today it might pick up the pace a bit. We'll see. I was waiting, if you've seen my weekly analysis videos, I'm waiting for it to break down or to move up. It looks like it's based off yesterday's price action. It looks like it's going to try to move up, and it's broken the high already, so that's good. Sugar, look at that. That's good, man. Look at that, beautiful. So they'll wobble a bit here and then consolidated. Has it broken these highs? Yeah. So sugar, if you can look at that, look at sugar. That looks good and looks really bullish. Coffee, overextended on the daily. That's coming down, so that's not going anywhere. Lumber, oh, I was bullish on lumber. That's why I had it. It's looking ridiculously bullish. It's gapping up. Bitcoin broke through. That's fine. We spoke about that. That's overextended now. It's done a big move. So here's why Bitcoin is screwed, is because that massive candle is just ridiculous. It's too much of a move in one go. It could try for 12,000, but that's highly dangerous. It's overextended here. It should at least come down to 10,500. Ether is a little bit more paced, but it's still overextended. You can see I mapped out a while ago what I was expecting it to do. And so a pullback to this level to bounce and go is fine, or potentially to continue upwards, but high risk. Again, same as gold. That's the issue. Cool. That's it. Okay, guys, I'm going to leave it here. Let me know your thoughts when you watch the video. Okay, cool.